Hey everybody, Chuck Barone here. It is Thursday, March 14th, 2024, and what a day we saw today, guys. I don't know if anybody was paying attention to these markets today. We got the wholesale inflation numbers. They came in double what the estimates were. A disaster in the making, and we're going to go over that in some detail. Of course, that number rattled these markets around pretty good today. We're in the midst of a kind of a correction again. These guys, they can't figure it out, guys. They want to they want to keep feeding us this good news mantra. Oh, everything's good, everything's wonderful. Don't you worry about a thing. And then we get numbers, and truthfully, but to take these numbers with a bit of a grain of salt, because I'm guessing that if they can fudge these numbers one way or another, they're going to fudge them toward good news, right? So when they really give us crappy numbers like we got today, especially on inflation, well, it's probably just maybe a little bit even worse than what they're reporting. All right, so let's look at these markets today. Stock market reacting very negatively. Not a big crash coming, but I got a feeling we're going to be kind of having a correction, a little bit of a correction coming up. The markets had gotten pretty exuberant, expecting these massive rate cuts. I don't think we're going to get rate cuts, guys. So now we're sitting here with the stock market today. The Dow falls 137 points, 38,905. The NASDAQ falls 49 points, 16,128 on the NASDAQ. The S&P goes down 14 points, now sitting at 5150, and we're not hearing about new records every day anymore, are we, guys? And I doubt we're going to for the near future. Okay, so stock market across the board, blah, crappy. Nvidia falling out of favor for some reason. Companies still earning, so earnings will probably help turn this market around a little bit. But the way they're earning, we're going to talk about that a little bit in this show too. Okay, the bond market today, bonds selling off, yields rising. The 10-year jumps 10 basis points. Now we're back to that again, where bond market's a casino. 4.30% on a 10-year bond. The 2-year jumps 7 basis points, now at 4.69%. So we got that crazy inversion that we've had for so long. And this is usually a pretty good indicator of a recession. We sure believed it when we first saw it. It might be a better sign of a coming recession now than it was then. We're not having the government, well, I shouldn't say that. The government's always pumping money into the system, but not in the amounts they were at the close of the pandemic. This is all crap, guys. Bad stuff. The dollar rallies up, not a surprise, up 58 bips on the index, 103.37. I've been telling you guys that the inflation outlook is crummy, and if rates are going to stay high or even go up, the dollar is going to strengthen. Here it comes. Metals taking a little bit of a breather today, been sizzling hot. Gold falls $11.20, $2,163 for an ounce of gold. Silver falls 17 cents, $24.78 for an ounce of silver. So still good, strong prices for both gold and silver. I'm telling you, you're going to see silver above 25 any second now. So there's a chance to make an easy profit. Oil still going up, man. I don't like the looks of this. Oil up another $1.33 per barrel today, sitting at $81.05 for a barrel of West Texas Intermediate. This is driving these inflation numbers, I'm sure, partly. I don't know, guys. All of this looks really crappy to me. Oil is well above the trough it's been trading in between 70 and 75. We'll see how long they can hold this numbers. But it looks like the trajectory of oil kind of turning more of a, instead of a downward, now turning a little bit more toward an upward trajectory. That's never good news for people that got to buy gas for their cars, right? And Bitcoin today takes a breather, a little bit of a sell-off today. I'm sure it's some big profit taking, lots of profit in Bitcoin, falling $2,741, still sitting at 70,503 for Bitcoin. Guys, I'm telling you, you're going to, with these, the ETFs haven't really fully engaged yet. And when they do, You're going to see Bitcoin 100,000. You're going to see that. All right, so let's talk about this PPI disaster today. Guys, this is like the worst possible news we could have gotten today. Wholesale prices jumped 0.6% last month versus 0.3 expected. 0.3 is bad enough. But to double that, horrible news, horrible news, especially for people looking for rate cuts this year. We're not going to get them. Not if inflation continues to go like this. You gotta understand, guys, PPI, this is the wholesale side, right? CPI, the consumer side, retail side, PPI, wholesale side. Well, this kind of PPI gives us an idea of what we're gonna see on CPI, right? If producer prices are rising, consumer prices tend to follow along even more typically. So now we can see over the next 6 months or so, already baked into the cake, PPI is up almost 1% this year already, just in the last 2 months. Guys, this is horrible news. This is foreshadowing higher inflation numbers coming over the next 6 months. And the formula is pretty simple, guys, how it works. And almost 100% reliable. When wholesale prices go up, retail prices are almost certainly going to go up by even more. Okay? So this month's number, 0.6% on an annual basis, is over 7% wholesale inflation. If we had 7% wholesale inflation year over year, what do you think consumer inflation would be? Retail inflation? 10, 12? Something ridiculous and obnoxious, revolution causing, right? So this number, horrible news. It tells us now we can write some things down. Okay, we know that commodities, metals, oil going to continue to rise. We know the bond market going to tank. We know that. Okay, especially if these numbers continue to play out over the next few months. Rates are nowhere near high enough to bring inflation down to their target number. They're not even close, guys. Not even close. So with all the sunshine and roses and smoke they've been blowing up our butts, guess what? It's all bull. These numbers confirm where we're at. Now, you might not like it. The government's not going to like it. Nobody's going to like it. And the media and the government are going to do their best to spin this into somehow something positive. But I tell you guys, you don't need to have a degree in finance to see that 7% wholesale inflation is a terrible thing, right? So this is really bad news. We did get a little bit of better, well, not so bad news coming. Retail sales rising. We got that data in today, going up 0.6. So that's a pretty good number. Sadly, though, they were expecting an even higher number. They were expecting 0.8, especially after last month's catastrophe where retail sales actually fell 1.1%. So they're not quite where they were before the beginning of last month, right? So retail sales rebounding, but nowhere near where they need to be. And jobless claims came in, holding steady, 209,000. That's down 1,000 from last week, some pretty close to estimates. So the economy, retail sales, hanging in there. Jobs, hanging in there. Corporate earnings, hanging in there. So the economy continues to just kind of trot along. But now you add in this big inflation thing. Guys, if I'm the chair of the Federal Reserve, and I'm serious about knocking inflation down to our target number, I'm considering rate hikes right now, not rate cuts. You're not going to knock inflation down by cutting rates. So this is, you can kind of piece this out in your brain. Not good news for us, the schmuckatellis, the working people in this country. We can continue to expect the worst of it, right? And as soon as the economy turns sour, which they're trying to engineer they want this soft landing bullshit. Now you're going to have stagflation. You're going to revisit the 70s and 80s. I've been warning that it took them 10 years to beat inflation last time we saw numbers like this. Yet we're figuring we were done in a year or 2 years. Now they're comparing this number. Hey, in the peak in 2022, it was way up here. Don't listen to that crap, man. This is today's number. 2 years ago doesn't matter. A year ago, last month doesn't matter. This is the number, right? Horrible news. Now listen to this, guys. This is the one I want to talk about today. I'm no fan of major corporations, and especially the things they're doing most recently to scam up their profits, cheat consumers, cheat their own workers. Don't get me wrong. I'm no socialist, commie, asswipe. I'm a capitalist to the highest order. But, there has to be a point where some of the spoils have to be split with the people that do the producing, right? Listen to this. Tax dodging major corporations, there were 64 of them in this study, are now paying more to their executives in compensation than they're paying in federal taxes. So now the corporations who are screaming already, wow, our rates are too high. We need to cut corporate rates. We need to cut corporate rates. No, we don't. No, we don't. When you're paying your CEO and your members of your board of directors or whoever the hell you're paying, your executives, your C-suite people, more than you're paying the government in taxes, and you're making profits, something's funky, man, right? Listen to this. The study shows they studied 64 major corporations, now paying more to their executives than they're paying to Uncle Sam. On some of these companies, let's listen to some of these names. These are not like fly-by-night little weird companies you never heard of. We're talking about Netflix, Ford, Tesla, T-Mobile, a dozen energy companies, all with the same statistics. Listen to this, guys. The 35 worst offenders of these corporations. The executive pay over the last 5 years totaled $9.5 billion. So they're paying, these 35 companies are paying out $2 billion a year almost in executive compensation. Must be nice, right? Now listen to the tax bill. These same 35 companies that paid out $9.5 billion to their executives had an average tax bill of a refund of $1.8 billion. So they're paying no taxes. The executives are getting all the money. But we keep hearing about we can't give those poor minimum wage people a raise because, it'll cause prices to go up. The cost gets passed down. You don't think $9.5 billion in executive compensation gets passed down, guys? Really? So this is like what happens when you have a system like we do, where the moneyed class can, for all intents and purposes, bribe the government to rewrite the tax code, rewrite the corporate laws, and rewrite everything to their favor. And this is what you end up with. The companies are getting government is paying the company, basically. And the companies are taking that money and giving it to their executives. Now they're blaming this on the big stock buybacks. Companies using, that used to be illegal. When I first voted in 1980, it was illegal to buy back your own stock. That all changed with Ronald Reagan's revolution. And companies use that now to inflate their profits, inflate their stock price. It also leads to inflated executive pay, which is always linked to earnings. Also, the tax cut from Trump's year back in 2017, lowering the corporate minimum from 35 to 21. Plus, they have all kind of fancy special loopholes for these corporations. The one that I found the most galling, though, is these executives taking this $9.5 billion can put as much of their compensation as they want into tax-deferred accounts, much like your 401k, right? So they can put the money away. They don't have to pay income tax on it until they take the money out, right? But here's the difference. They cap out your 401k. You can only put so much in every year. These executives, there is no cap. They can put billions and billions and billions of dollars into these accounts. to avoid ever paying taxes on it. Come on, guys. Really? Is this the system we want? Is this the way we want to run our country? We got deficits up to our eyeballs. And this is the way corporations are going to work it. You know, in the 50s, corporations paid more than half of all the revenue to the U.S. government. You know what it was last year? 17%. And they're still screaming they're paying too much. This is as close you're going to see to a real angry rant from me. I don't typically do that, you know, like a lot of other YouTubers do. But this is just sad stuff, guys. But this tells us, you know, they got us arguing about guns and silly social issues. At the same time, they're rewriting the laws to perpetuate their own wealth forever. It's crazy. Anyway, guys, that's it for the day. We love you. We appreciate your support as always. We'll be back tomorrow to wrap up this crazy week. Who the heck knows what we're going to be dealing with tomorrow. Today, not a great day, though, guys. Terrible inflation numbers and this tax dodgy stuff. Not cool. Anyway, tomorrow's another day. Please hit me up in the comments with your questions. I'll be on there today answering everything. It's fun communicating with you guys. Back again tomorrow. Until then, everybody, take care. Thanks.